What is going on, everybody? Paul here, coming at you with your crypto coffee update. The news, the conferences, the events, everything you'd like to see in the crypto space, all brought to you by yours truly. And all I'm doing is really empowering you to do your own research because all the links are below in the description. So, full transparency as always here at Cryptide, and of course, as always with Paul, a simultaneous sip, guys. Join me. Good stuff. Hope you guys are having a great downhill for the rest of your week, rolling into the weekend. Let's go ahead and jump into what we have for the day. You see Crypto Panic open, of course. Always like to give them a shout out. Fantastic news aggregation service. Love it. Now, let's jump into the news. The world's 23rd richest man, which is, being 23rd in a race doesn't sound too great, but if it's in, how wealthy are you, and you're the 23rd richest in the world, pretty good. He jumped into the first funding round for Bakkt. Now, just a quick recap. Bakkt is a company that seeks to basically open up and exchange Bitcoin futures actually backed and settled in the cryptocurrency Bitcoin. This is specifically different from the Chicago Board of Exchange, their futures for Bitcoin, as that is denominated in and settled ultimately in US dollars. So Bakkt is looking to do something completely different and assumingly add a level of credulity to the cryptocurrency space. Specifically, it is started by the Intercontinental Exchange, which is a mammoth institution that owns a multiplicity of various stock exchanges worldwide, including the New York Stock Exchange. Li Ka-shing, the individual who's the 23rd richest man, jumped into the investment round as said. It's not really clear exactly how much he invested, nor is really that public business in my opinion. But nonetheless, this just goes to show that Bakkt has massive potential despite the recent delays. I've repeated multiple times that I'd rather them delay it and ultimately do it right, make sure everything is regulatory compliant and good to go before launching, rather than go ahead and keep to a arbitrary date and launch a product that is not particularly, let's say, fit for all mainstream investors. Because after all, this is Bitcoin's major break into the financial institutions and institutional money, basically, because this is a huge company we're talking about. I mean, they own the New York Stock Exchange and others. Pretty big. So I also wanted to bring up, they have their own podcast, so if this is something that you're particularly interested in, you want to be following, ICE, Intercontinental Exchange, is putting out a lot of information regularly about their activities. They have some great interviews and some fantastic people coming on there, so definitely worth a look in my opinion. And this came out on January 7th, so a couple days ago, and it only has 28 views, so, I guess you don't really go to YouTube to watch the New York Stock Exchange per se, but hey, if you're into financial information, you too can do your own research and get some interesting stuff out there. Now, speaking of Wall Street, they have observed some bullish trends from OTC, or over-the-counter crypto trading. Now, for those of you who are perhaps unaware, there's more than one way to obtain Bitcoin, whether it's going and getting it from one of the Bitcoin ATMs that may exist in many cities and populated areas, not so much at your local gas station per se. You can also buy it via an exchange, which is something that many people seem to do. And there's also OTC, over the counter, which essentially means you just pair a buyer and a seller and you exchange for a set price. Now, this is a very interesting way to obtain Bitcoin because it doesn't actually impact the volume on the exchange, so it doesn't move the perceived price that you're seeing on your screen, which means that it's technically more beneficial if you're accumulating large amounts because you get a fixed price, perhaps even at a discount if the individual doesn't want to deal with the liquidity issues and the exchange and everything like that. So OTC is a very legitimate option. It's definitely something that has become more popular, and Cumberland saying that the OTC volume for their exchange for over-the-counter Bitcoin trading normally is relatively balanced between buyers and sellers, which is reasonable. However, they've increased approximately 60% towards counterparties buying, which means that money is coming from somewhere and purchasing large amounts of Bitcoin and assumingly other digital assets. So it just goes to show that during the bear market, that's when people are buying that are what we call the smart money, right? Buy when there's blood in the streets. That's not to say that we're at the Bitcoin price bottom, or if it can't go extremely much lower, down to $800, I don't know. But suffice to say that the underlying technology, the fundamentals, and the institutional investors that are looking to apply this type of new distributed ledger technology on which Bitcoin is predicated, they're not going away anytime soon. So with that said, let's move right along. Oh, I found this really interesting, guys. 50% of Bitcoin, the supply, hasn't moved in a year, and 20% may be lost forever. That's difficult to determine. After all, maybe Satoshi Nakamoto's out there somewhere hanging out on a yacht, just it was a pseudonym after all, and maybe he's waiting to cash in his Bitcoin. That may be considered lost forever, just considering that it hasn't moved for the better part of 10 years. However, it's very difficult to discern when a wallet is truly lost. Obviously, individuals can come out and say, hey, I lost my private keys from back in 2011. It had, $8 million worth of Bitcoin, and that's just gone. Can't access that. If you don't have the private key, can't get it. So that could be a realistic proposition. It could be something that occurred, but it's difficult to ascertain, is my point. Now, this is something that's more easily verifiable, the Bitcoin supply that has not moved. Whether this is individuals who are simply holding for the long term or hodling, as has become the semantic meme, nonetheless, this means that the actual liquidity you see on exchanges between buyers and sellers is actually much less than the total supply that has currently been mined and is out there in the marketplace, which can bode well or could bode unwell depending on your perspective and how you see the intrinsic value, which there's really no such thing as intrinsic value, but the base value or the fair market value, I guess you could say, of the digital asset that is Bitcoin. So just a really interesting point. This comes from Delphi Digital, a research firm that was able to check out the unspent transaction outputs and define kind of exactly what has moved, what hasn't, and over how long. And it's pretty interesting how they were able to establish whether or not Bitcoin is lost. They said if it didn't move for 5 years, then that's either the longest term holders or it's just gone. So they kind of did a guesstimation off of that. Again, maybe there's people out there who have just been holding for 7, 8, 9 years and just, hey, I'm not moving it until it hits $1 million or some other arbitrary point. Again, so difficult to ascertain. Moving right along, China. Of course, China and their wishy-washy relationship with digital assets in general, specifically Bitcoin. Most of the mining activity on the Bitcoin blockchain used to come out of the nation of China due to low electricity costs and opaque regulations surrounding the activity. However, in 2017, there was an ardent crackdown on cryptocurrencies as a whole, and the Chinese Communist Party, which is essentially the entire society of China in terms of dictatorial authority, said no more, we ain't doing this. So they are waiting and pausing any kind of cryptocurrency activity outside of explicitly permissible activities. And now it looks like they may be set to reverse that and begin regulating blockchain firms as early as next month, which means that you could have the world's most populous nation with a growing consumer base begin to see cryptocurrencies not only more accessibly, but as something that is permissible through the Chinese Communist Party. After all, there's a lot of issues going on between the Chinese trade war with America right now. There's also Mei Huawei, who was arrested in Canada and subsequently received a bail, but not after a lot of saber rattling from China. So a lot of complications in international relations, and who's to say how this could potentially affect the Chinese domestic market. Fun fact, 76% of the average middle-class Chinese portfolio is held up in real estate, which I find just extremely interesting and disproportionate compared to Western counterparts. So just some interesting food for thought there. We live in an amazing world and really cool stuff is happening. Let me know below in the comments or over on Discord what you guys think. How do you think that China potentially loosening their grip on cryptocurrency regulations may impact not only the Chinese domestic market and economy, but the wider crypto market as a whole? Could we see a major resurgence of mining return to the Chinese mainland due to depressed energy costs, or perhaps maybe this consolidation that's occurring in the 2018, now continuing into 2019 bear market, maybe has seen mining activity relegated to where it is already situated, i.e. no sense shifting miners around when we're not sure if it's going to be profitable the next day. So onto the Western world, U.S. financial data company FactSet, they're suing blockchain terminal affiliate. So essentially, these two companies, CG Blockchain, who is the defendant in the case, and FactSet, are in a legal spat. They agreed to build a interfacing application between the two firms. It said that CG Blockchain did not actually live up to their end of the bargain. They agreed to pay about $3.8 million in licensing fees to essentially use FactSet's software. And they did not. They still owe the company apparently $2.8 million in damages. Now, this is alleged in the lawsuit, but this is not the first time that CG has been sued. It turns out that another company sued them for $150,000, again for failing to pay for recurring services. So this is something that it seems that CG has set a precedent for itself for. However, this just goes to show that In bear markets, managing financials like this can be difficult. Perhaps that's the case here, or maybe it's just a case of an individual just flagrantly mismanaging their own finances and basically not living up to contract. So just goes to show why it's super important to get things in writing unless you completely trust the parties that you're working with. It's something that both assures everybody involved, and in the event of a discrepancy, it can honestly save friendships and business relationships if there is a clear guiding contract through which you can kind of navigate the seas of uncertainty in financial relationships. So, interesting point there. Also, we have Steemit. Steemit has been in the news a bit lately because of their terms of service, and this is definitely something that is being actualized. We're seeing it occur right before our eyes. A decentralized platform that was supposedly immutable and decentralized, but has terms of service that, if they are indeed enforceable, which when we get to the story you will see that they are, means that what is the point of it? Is it even decentralized if you can arbitrarily ban people's accounts, for instance? And that's exactly what happened. It's a pretty wild story. The pseudonym Dark Overlord, Dark Overlord, which is a heck of a name. He says he has 9/11 blackmail information, sensitive data. This is stuff we've heard before. It seems like some kind of action flick. Who knows if it's true or if it's not? But essentially, this individual Dark Overlord was kicked off of places like Facebook, Twitter, etc. And it's kind of unclear why. Maybe he violated their terms of service as well. Maybe there is a big CIA plot to take this guy down because he has legitimate information. I don't know. The big takeaway here is that he moved over to Steemit. Now, he said, hey, this will be a strategic checkmate for me because I can go onto a cryptocurrency platform where I can blog this information. It's uncensorable because it is decentralized. Well, not so much. You can see here that he was banned from Steemit due to terms of service violations. Again, this calls into question not only the legitimacy of this particular ban given the associated material, but also the notion that Steemit in and of itself is a decentralized platform. Because if it is censorable, then even if it is decentralized through consensus, is that a meaningful notion of decentralization, or is it really just a paper tiger that doesn't really matter if you can enforce these arbitrary regulations in your terms of service? And of course, the terms of service are expected to be arbitrary in any particular company if you are a single centralized company. Again, this is the big kind of butting of heads between decentralization and centralization, and to what degree you should use either. After all, I don't want to have to wait for a 10-minute block confirmation time for my Mick latte, but at the same time, I may be willing to wait 10 minutes to attest some financial data about my down payment on a house to the Bitcoin blockchain. So really, it's a question of what is most preferable for a particular instance or situation. There's no one size fits all. Now for Steemit, this is definitely not the suit that fits, considering that they were purported to be, and as they themselves stated, a decentralized platform. So I also want to draw users' attention to the ugly truth behind Steemit. Dan Larimer has a litany of questionable business practices. Not that he's a bad dude, not that he's scamming people. I don't even say he's scamming people. Maybe he's kind of being dishonest, maybe unintentionally, because as an individual, he seems like a pretty alright dude. I mean, the dude's got a great head on his shoulders. He's really smart. I mean, he could build these things. It's really amazing. However, he just seems to jump from project to project. BitShares ultimately had consensus issues, but that was back in 2012. So that's the kind of thing where it's like, I let it slide, really early days. After that, he built Steem. Steemit was the blogging platform we just discussed on the Steem network. And Steemit itself had some really interesting situations in terms of their launch. When they launched, they said, hey, you can mine Steemit now. We're announcing it on Bitcoin Talk. And it seems that the individual who started the project and posted this information posted the wrong mining information. So for a short time, people could not mine, which is problematic. However, what's strange is it seems that at least 75% plus of the supply was mined by the time the correct information was put into the Bitcoin Talk thread. So that's weird. Don't know who mined it, don't know where it went, can only imagine, but suffice to say there's definitely some interesting information happening around there. And again, this is all blockchain, so it's transparent to a degree, but again, because of Steemit's relative centralization, that is called into question. It's tenuous, but nonetheless, suffice to say the opaqueness surrounding what otherwise should be a verifiable, auditable, decentralized project is worrisome in my opinion. And I'm sure, what's his name, Dark Overlord? Yeah, Dark Overlord, heck of a name. He would probably say the same thing, but he can't say so because he was banned from Steemit. So interesting stuff there. Also, just to drive this home, guys, why it's so important to know that you are using a reputable service when dealing with finance. I know we're in the wild, wild west here in crypto. It's really amazing. I read an article recently. It says Monero maybe mined is, or what is it? Malware mined as much as 20% of the Monero supply, which is just crazy. I mean, whew. So we'll touch on that probably in the next Crypto Coffee update, maybe even do a weekend video just to chat with you guys, get some information to you. But this company known as dx.exchange, when you would log in, they would give you not only your user data, but all user data, login tokens, and password reset tokens as well. So basically this exchange, just due to, I guess, poor programming, poor data security, was inadvertently, assumingly, programmed in a vulnerability that allowed any individual to basically collect these tokens that in turn could allow them to get into other users' accounts. So that's not good. Strangely still, this seemed to be a service that allowed you to trade Apple, Facebook, and Tesla stocks from anywhere in the world 24/7. That just, I mean, I don't know anything about this. This is the first time hearing of it. Did the research, of course, for the video and read about it, did a little bit of research on it. It just seems shady. I could be completely wrong on this depending on securities law. I am not a lawyer, but just trading stocks like that from anywhere in the world 24/7, given how stringent the SEC is in terms of defining securities and how these securities are handled, maybe it's an aftermarket thing, but nonetheless strange. And just based on that alone kind of gave me a eyebrow raise. But then reading about the security vulnerabilities, just goes to show you got to be really careful with this kind of financial information, guys. You never know who's behind this kind of stuff. And not to say that regulation is the thing that's going to fix all that and the government comes in and waves a magic wand, but nonetheless, nothing is ever going to replace doing your own research, consulting with experts and individuals who you trust and believe that have your, no one's going to have your best interest at heart per se other than you, but you just got to do your own research and suss out what is the best fit for you. Again, if you're dealing with millions of dollars, there's nothing stopping you from doing an over-the-counter trading kind of thing. There's local bitcoins. There's all kinds of services for that. And again, if you're using a very small amount of money and you're sure you're within your laws and your particular jurisdiction, and you want to use DX Exchange, Estonian-based, and yeah, go for that as well. But it's all about doing your own research and kind of knowing your own risk and how much risk you're usurping by using these various services. So with that in mind, that's really all I had to talk about today. Again, no conferences till the 15th, just kind of a quiet beginning to 2019. Everyone's charging their laser for a huge start to a great year, and hope you guys are having a great year as well. So thanks so much for watching, guys. Seriously, you guys make the channel what it is. You make Cryptide what it is. Without your support, I would just be a guy talking into a little webcam, which I guess people do for therapeutic reasons, but my job is to get information in you guys' hands. Links below in the description, of course. Much love. My name is Paul, signing off. We are Cryptide, and remember, the tide is rising, as is Cryptide's status in the crypto community as a purveyor of information. Much love, guys.